After a 2-week reprieve when share trading was suspended, the truth hits home. Investors are pulling out of Evergrande. Shares in the Chinese real estate developer tanked more than 12% today in Hong Kong. Evergrande is the world's most indebted property firm and faces a series of bond defaults.
Fears for the future of Evergrande are swirling through global financial markets, cranking up anxiety on stock exchanges from Hong Kong to Frankfurt and raising the possibility of contagion. Evergrande founder Xu Jiayin's colossal borrowings have left the firm owing more than $300 billion, and it's struggling to pay that back. The latest desperate attempt to raise cash was a $2.5 billion deal to sell its property services unit to smaller rival Hobson. The deal was doomed.
Actually, Hobson and Evergrande have unable to agree to the deal terms, so the deal is suspended right now. Therefore, the Evergrande stocks start trading today, and the investor have concern about Evergrande over 300 billion bill. And I think the lesson we learned from this deal is that turning a blind eye to the crisis is making crisis worse.
After the sale fell through, Evergrande's share was back in play. It soon started to slump, tumbling 12%. The failure of the deal brought Evergrande one painful step closer to defaulting. With real estate accounting for nearly 30% of Chinese GDP, Evergrande's collapse would send shockwaves through the world's second biggest economy.
For more on that story, let's bring in Fraser, Howie, a China expert and the author of Capitalism, the fragile financial foundation of China's extraordinary rise. And our financial market correspondent, Christy Platson, who keeps an eye on the Frankfurt Stock Exchange. Hello to both of you. And I would like to start with you, Fraser, because trading of Evergrande shares was suspended in order to get a deal done, perhaps a life-saving deal. That deal is dead. Why?
Well, as I say, basically they couldn't agree terms. The Hobson obviously needed to spend a few $1 billion to buy this company. Could they get the bank finance in place? Did they look at the assets? They didn't think it was worth it. Were there, hidden ties associated with it? This ultimately was only a tiny deal compared to the debt that's outstanding. And so I think it just shows how difficult it is to deal with Evergrande at the moment, how uncertain basically anything with Evergrande's name on it is.
I mean, is there any point in dealing with Evergrande at all, given that many analysts expect it to go bust by the weekend?
Well, basically, they are probably likely going to default. They had a 30-day grace period on a bond payment they've already missed, and that is what's coming due this weekend. They're likely to fail on that. But even if they didn't, somehow, if they were able to find the money to pay that, it still hasn't solved Evergrande's problems. It has tremendous debts in terms of issued loans or issued bonds, and also it just owes suppliers. It's got lots of property it needs to build. It's basically in a shocking condition.
Now, looking at the sheer scale of Evergrande and the debt involved, Christy, clearly this will have repercussions on a global scale. I mean, what would a default of this company mean for global financial markets? And what do you hear in Frankfurt about that?
Right, Monica. Well, I can talk a little bit about what we're hearing today. I mean, we did see a dip in global markets on the news. Clearly, this is shaking investors. We're seeing renewed jitteriness like what we saw a few months ago when Evergrande first started making headlines. Now, Chinese banking regulators have commented since the news of the failed sale came out. They basically said that they think things are under control and that they do not anticipate a collapse of China's real estate market. So extrapolating from that, and assuming they're right, of course, we could maybe not expect a major hit to global markets. So I think we have to remember that China is actually coming down intentionally on these over-indebted real estate markets. They're at least giving the impression that we're seeing something of a controlled collapse here.
OK, well, that sounds promising because, Fraser, I was wondering if Beijing is happy to basically just stand by and watch this drama unfold, having such a company basically defaulting on such a huge amount of debt, aggravating international investors in this current climate who might just as well turn their back on China and say it's no longer worth it.
Well, I think that's the key point here. It's not so much that there's a direct contagion in the sense that there's $300 billion owing to foreign markets or something. That simply is not the case here. There simply isn't this is not Lehman Brothers, as it were, Chinese style. This is a very domestic sort of concern. But when you've got one of the biggest property developers in China basically collapsing, when you've got a confidence in a 30% of the economy evaporating, that clearly must send worrying sort of signs to any foreign investor. And simply saying is that there is no Chinese miracle here, that the much sort of vaunted long-term Chinese planning just is a myth.
All right, Fraser, Howie there, and Christy Platzen in Frankfurt. Thank you both so much for sharing your insights with us.